Everyone. So today I'll be talking about introduction to Forex basic. If you're a total beginner, like you don't know how to trade and you're interested in learning about Forex, then I'll urge you to watch this video to the end, because I'll be breaking down what is Forex and how to trade Forex as a total beginner. So without wasting much of your time, let's dive into it. So what is Forex? What do you understand by Forex? Now, Forex means foreign exchange. It is one of the most traded markets in the world, with over 6.3 trillion daily. Wow, you can see that's the most largest traded market in the entire world. So why shouldn't you why shouldn't you be trading in Forex? Because imagine 6.3 trillion is being traded every single day in Forex market. So it is a decentralized mean. It is decentralized, meaning it happens 245, like 24 hours for 5 days. That's from Monday to Friday. Now it is one of the most liquid markets. It involves the exchange of one currency for another. So when you trade Forex, you either sell one currency to get another one, or you buy one currency to let go of the other one. So Forex participants. So there are people who participate in Forex trading or Forex markets. We have the government. The government of a country, they also participate in Forex market. We have the investment funds, like the hedge funds, all those people, like all these big guys. And we have corporations, we have traders, like speculators. You and I, we are the traders. And we have the banks. The banks also participate in Forex markets. So these are the people who participate in Forex market. Now we have Forex trading session. Like these are the times you can trade Forex. We have about 4 trading sections. We have London session, which begins from 7 a.m. That's African time, 7 a.m. Nigerian time to 5 p.m. And we have New York session, which begins from 1:30 to 10 p.m. Nigerian time. And we have Sydney session, that's each begins from 11 p.m. I guess. And we have Sydney, and we have Tokyo time. So forget about the Sydney and Tokyo time. The most traded time, like the best time to trade Forex, is the London and the New York session, because during the London and the New York session, that's when the most liquidity occurs. So the London session and the New York session are the best time to trade Forex. So if you want to trade Forex, you should focus on either London session or the New York session. And the best time to trade is when the sessions overlaps. That's between 1:30. That's as you can see on the screen from where I lighted. The best time. That's the time to trade Forex. So why should you trade Forex? It has high liquidity. Now the use of leverage. It has high liquidity. The use of leverage, low transaction cost, low capital requirements. It is 245, meaning 24 hours for 5 days. You can make a lot of money from the market. Now, how do you read currency pairs? You can see on the screen we have Euro/USD. This EUR mean Euro and USD mean United States dollars. These are the short form for those currency. As you get used to the market, you become familiar with this shorting form currency. Now the euro, that's the one by your left, is the base currency, and the USD by the right is your quote currency. So if you are selling, let's say for example you are selling the euro, you're either selling the euro and you are buying the dollar, or you are buying the euro and you are selling the dollars, just as I said from the beginning of this tutorial. So from the beginning of this tutorial, and we have types of currency pairs. We have the major pairs. Now these include the most traded currencies in the world. Examples, you see them with having USD by their side. For example, we have Euro USD. It's a major pair. We have USD JPY. That's USD dollars, United States dollars, and Japanese yen. So the major pairs, you mostly see them having a USD by their side. And we have the minor pairs. Now this does not include the US dollars, but they also involve other major currencies. For example, you will not see them having USD, but you see them having Euro JPY. So it's include a major currency. For example, Euro is a major currency. Then the other one is what? JPY. And we have GBP, JPY. That's British pound and the Japanese yen. So we have exotic pairs. The exotic pairs, they involve one major currency and one from a smaller or emerging economy. For example, you see exotic pairs having like USD, but you see the other one is like TRY, that's Turkish lira, and Euro ZAR or USD ZAR, that's Euro and what? South African rand. So this is to tell you that the exotic pairs may have a major currency, but the other pair or the quote currency, or maybe it can be the major currency also, is from an emerging economy. For example, USD NG, that's Nigerian naira, NGN. So what is a peep? The next thing is, what is a peep? Now a peep, when you begin to get acquainted with forex markets, you get to know that a peep, you definitely need to know what is a peep. So what is a peep? It means percentage in points or price interest point. It is the smallest price movement that a currency pair can make. For example, let's look at this breakdown. Now for most currency pairs, a peep is 0.0001, meaning the fourth digit unit for most currency pairs is a peep. For example, if the Euro USD moves from 1.1050 to 1.1051, that's a change of 1 pip. The difference between them will be what? 1 pip. Now for currency pairs that involves the Japanese yen, you mostly see them in 2 digit places. Japanese yen. Now a pip is what? 0.01. For example, if the USD JPY moves from 110.50 to 110.51, that is a change of what? Of 1 pip. Now pips are used to measure price movements and calculate profits or losses in forex trading. Now take a look at the picture. So like you can see 1.14 Euro USD, 1.14988, 1.14998. If you subtract them, you have the difference between them will be 1. So it's telling you what? A difference of 1 pip. That's the fourth digit number or fourth digit unit. That's your pip. And the last one you're seeing is the pipette. That's the pipette. What is the lot size? Now lot size determines the volume of your trade. You come across lot size like you need it to trade forex markets. Now standard lot size, that's 1.0, that's 1, that's standard lot. It means what? You are buying, you have like 100,000 units of the base currency of the base currency you are buying. Then the mini lots, that's 0.10, that's 10,000 units. Let's say you are buying the mini lot, you are buying Euro USD. So you are buying Euro USD. If you buy Euro USD and you are using the mini lots of 0.10, it means you are buying 10,000 what? 10,000 units of the Euro USD. Then micro lots, that's 0.1. That's 0.01, sorry. Me, you are buying 1,000 units of what? Of the base currency. Nano, it's very rare. You hardly come across the nano lot size. Though for the purpose of this lecture, that's about 0.001. That's 100 units of the base currency. You hardly come across nano units. But just for the sake of the lecture, I try to include it for your own understanding. Now, types of forex orders. We have types of forex orders. We have the entry orders, we have the stop loss orders, and we have the take profit orders. Now, the entry orders is subdivided into what? The buy stop order, the sell stop order, and the limit orders we have is also subdivided into what? Buy limit order and the sell limit order. Now, buy stop order. What do we mean by buy stop order? It's an order to buy at or above a specified price. So let's say, for example, you have your current price to be here and the market is going up. So you put a buy stop order that when the market reaches here, it should stop and buy. So as the market reaches here, it will stop and take your order. Then you're into the market and it will keep going. That's what a buy stop order. So for a sell stop order, when the market is coming down and you set your sell stop order here, it means if the market reaches here, it will stop and take your order. And what if the market continues? Then you are in profit. That's for a sell stop order. That's for a sell stop order. Now, for a buy limit, meaning if the market is coming down, and you set your buy limit below, that will be below buy limit. It means the market has to be coming down, then you set your buy limit. It means when the market reaches this level here, it will buy the limit, it will stop, take you into the market, then it will reverse. That's what a buy limit. You are buying the limit, you are buying from here, meaning when the market goes up, you are in profit. That's what buy limit, you are buying from here. And for the sell limit, it means your order has to be above the current price. It means, let's say for example, the current price is here and the market is going up and you put your sell limit here. It means when the market reaches here, it will take your order, and if the market begins to fall, then you are in profit. That is what a sell limit. You are selling the limits. It has to be above the current price. That's sell limit. So what is balance and equity? Balance, that's the amount of money in your trading account, the money you have in your account. That's your balance. Now, what is your equity? What is equity? That's the balance in your account plus floating price, floating profits or losses. If you are in profit, if you add them to your balance, it will give you your equity. If you are in loss, if you subtract it from your balance, that will give you your equity. Equity is more of like the money you have in your account available for trading. So what is margin? Margin is a portion of your capital that is set aside as a collateral. That's the money your broker wants you to put aside. Meaning, okay, you want to take a trade. Now we need certain percentage of money to be set aside just as a collateral that you need to open this position. You need that money. You need to stake the money. Is more of like assurance to your broker that yes, you have the money to take that position or to buy that position. So is a capital you set aside as a collateral that your broker use to set or buy the position for you. Now, free margin, that's the amount of money available for trading. That's free margin. So with that, I think we've come to the end of this tutorial. I hope you learned one or two things from what I have said. If you have any confusion or any question, please leave them in the comment section and I'll try and attend to them and get back to you. Thank you for watching. And if I will advise you to like watch this over and over again, just to like grab the things I have said so far. Thank you. If you are new to this channel, please don't forget to leave a like and subscribe to the channel. Thank you very much.